Most traders face frustrations over inconsistent trades, over trades that just leave them frustrated because they are on a losing streak. So this video sets to address those kind of concerns where I want to help you improve your trading skills. So my name is Progress. I've been a trader for about 5 years now. Started trading in October 2020, and I've had my fair share of losses and I've had my fair share of wins. So I want to share today with you some of the things that have helped me improve my trading skill. Because if you want to be an inconsistent trader, there are some tips that I'm going to share today that you need to pay attention to so that you also can move from a losing streak and to being an inconsistent trader. So this is not a get rich quick scheme. This is one thing that I want to get out of the way. This is not a get rich overnight scheme, but trading is such a fulfilling passive online income if you take it the way you're supposed to take it. So without wasting much of your time, let's get to our first point, shall we? The first thing that you ought to pay attention to is tracking each and every trade that you take. So how do you track your trades? You track your trades by journaling your trades. Now, you have to pay attention that you note down your setups, the setups that you want to trade. Do you trade chart patterns? Do you trade retests to resistance or support zones like I do? I trade chart patterns, specifically the QML, and also I trade on trend lines, and I also factor in retests to support and resistance zones. If that is what you want to trade as well, or if that's what you want to be involved in, you need to note it down that these are the setups that I need to look for. These are the setups that I need to spot on the market before I take my entries. Because you can't just open your chart and just think, well, I think price is going up, let me just enter a buy. Or I think price is going down, let me just enter a sell. You just want to short the market just as soon as you open your chart. No, you have to have setups that you're used to trading. If you stick to your setups, you'll master them, you'll be focused, and also you'll be better able to tweak and refine them such that you are more profitable. So you want to journal that. You want to journal the types of setups that you take. Do you trade flag patterns? Do you trade chart patterns like QML? Or do you trade retest to zones? What is it that you trade? Do you use indicators? How is your trading set up? So you need to be sure and you need to be certain that this is the setup that I look for in the market, such that when you open your chart and you don't find that setup, you do not trade. So after you've noted down as you're journaling your trade, the type of setup that you trade, now you need to look for the entry criteria. What makes you enter the market? Do you enter the market when the price touches a trend line? If you trade trend lines, do you enter the market after trend line breakouts? If that's you, or do you enter the market when a retest to a certain zone happens, whether it's support or it's resistance zone? When do you enter the market? Do you enter the market like myself? I normally look at the daily time frame candle. If I'm trading crash, it has to be bearish. And the H4 candlestick, if I'm trading crash, it has to be bearish. And also the candlestick on the H1 time frame, M30, M15, or even M5, I have to have a bearish candlestick so that I can take that trade, especially the daily time frame and H4 candlesticks. Those have to be bearish. That's my entry criteria. And also at times I can aggressively enter just at the touch of a trend line if it's crash 500, because up to this date in 2025 I've traded crash 500 for at least 5 years now. So I'm better, I'm better well able to see market movement much faster than if you're just starting out on trading that synthetic index. So you need to know your entry criteria. When do you enter the market? Do you enter at the close of candlesticks? Do you enter at retests, at breakouts? When do you enter? And after that, you need to know your exit strategy, your exit point. When do you exit the market? Do you exit when a bullish pin bar presents itself? If you were in a bearish trend, do you exit the market when maybe, let's say, a price touches the opposite side of a trend line? Do you exit the market when another chart pattern presents itself that's against your entry? Do you exit the market when price reaches a previous support or an opposite support or an opposite resistance? When do you exit? You need to know your exit criteria. You need to know your exit point so that you're better able to be consistently profitable in your trades. One of the things that you'll have to also note down is your trade outcome. After you've placed your trade according to your setup, according to your entry criteria or your exit criteria, after you've done all of that, how did your trade play out? What was the outcome? Did you suffer a loss? Did you profit? You need to note that down. You need to note all of that down and not where your trade failed and how it failed, whether your setup was valid or it was invalidated. Do write down if you had early entries or if you had late entries. Do write all of that down, and also do take note as well to write the emotions that you experienced during that trade. I promise you, as you write this down, as you trade and also journal your trades, you'll become a much more profitable trader, because after journaling your trades, you're better able to review and see why your wins happened or why your losses happened. The second thing that will make you a profitable trader, a consistent trader, and the second thing that will improve your trading is to trade highly probable setups. Don't just trade everything that you see. Make sure that the setup that you're trading has a high probability of it ending in profits. Don't trade a trade where you are just like, looking at it and thinking maybe it will work out. No, leave that be. Just trade your setup and make sure it's a high probability setup. Third thing that will help you improve your trading skill is mastering at least one or two strategies. Don't master five strategies. When you're trying to get to do five strategies, you won't even be able to master them. Your attention is like diverted. You can't focus on this one thing. You have to be looking on that other thing. You have to be looking for this pattern. You have to be looking for that setup. Just master one or two setups. Like I've said, I trade chart patterns, and the chart pattern that I normally trade is the QML, and also I like using trend lines with support and resistance. So those are the two things that I look for in a market. If I'm not spotting QMLs, I'm spotting trend lines, and also with confluence, I can use support and resistance for me to enter my trades, and also look at entry criteria like I have to have a daily time frame candlestick that's bearish if I'm trading crash, or if it's something that I'm trading that's supposed to be bullish, the daily time frame has to be bullish as well. But I normally trade crash 500. I'm trying to just diversify and just try and trade currencies as well so that I can add on, because now the setups that I've been working on, that I've been mastering all these years, I can now look for them in other charts and see if I can be better able to spot them. So that's one other thing that you need to do for you to improve your trading skill. Don't focus on too many setups. Be able to master one or two. If you have to, maybe three, but at least one or two, then your entry criteria has to border around these two setups so that you are better able to focus and you're better able to master and grow. Because if you focus on so many things, your attention is just diversified and you can't grow easily. So for you to improve, that's the two. So the fourth thing that you'd want to do, remember I said journal your trades. You need to review them. You need to think back on a certain trade that you've made. You think back after journaling, after writing down your trades. So you think back on a certain trade that you made. How was your entry criteria, your exit criteria? Did you suffer loss? Did you win? Did you make it in that trade? You need to review your emotions as well. You need to review everything that happened, how the trade played out, so that you're better able to take the next trade. Jot down all of these things. I've got a trading journal that you can check in the links in the description below, and it can help you journal your trades. It can help you be a tool that will help you master how to journal your trades, and also it will help you in your review process. Because don't review your trades in your mind, don't keep your journaling in your mind. Be able to note it down. If you can't take this one, that's mine. Be able as well to just journal, even in a notebook, even in a journal that you can buy, or even in, you know, Word, Microsoft Word. Just be able to journal your trades so that you can review them, so that you can see how they played out. So you'll be better able to take better trades and improve your trading skill. Because when you're looking at a trade that you took and you've reviewed it, you will learn from it. You will learn from your wins, you will learn from your losses, and you will learn how to better take trades next time. Number 5 are psychological factors. You know what? These are very important because they play a pivotal role in helping you become profitable, in helping you improve your trading skill. You know what? Be patient when trading. Don't play out to FOMO. Don't be afraid that the trade will move without you. Don't play trades because you have fear of missing out. Do you know what? When you do that, you'll have early interest, and the drawdown of that trade might hit your stop loss, or you might blow your account. Also, don't revenge trade. If you've been on a losing streak, be able to close your chart, be able to just close your platform and go back to the drawing board, start learning again, and come back when your mind is settled. Because when you are affected by emotions, when you are so impatient, it will affect your trading. Even if you have skill, but if your emotions are just all over the place, it will affect your trading skill. So be disciplined, be patient, and always know that you don't need to revenge trade. If you've suffered a loss, close the charts, go and learn again, then be able to come back and trade another day. Because setups, remember, they always play out again. The market is always moving, it's always buying, then it sells. Market always balances out. So don't be afraid that the trade will play out before you've entered the market. If it does so, cool, learn from it whilst you're just watching it. So don't be a person who's not disciplined. Be disciplined in your trades. Don't let psychological factors hit you and not be able to trade. We're working on improving our trades. So we want to be patient, we want to be disciplined, and we want to enter when our setup is entry criteria that we've already proven to work before. One thing that I can't overemphasize is number 6, control your risk. You know what? Position sizing can make or break your trading account. Your equity can be increased. You know what? Even if you'd want to place, we call them Lambo, after Lamborghini, Lambo trades. When you'd want to open so many positions and you want to just make money fast, you know what? The trade might play your way and you can make that money. But remember, you are just teaching your mind that you always open big sizes. So one day you open a big size and suffer a huge loss. So you want to stay away from not practicing proper risk management. You want to practice proper risk management when you're trading. You want to risk at least 1 to 2% of your account, if you may. What do I mean by risking at least 2% of your account? This doesn't mean that you open trades that are equal to 2% of your account. No, it means that your stop loss can never be placed above 2%. If you have a trade, let's say that if you have an account, let's say that's 5,000 US, your stop loss can never be placed beyond $50. Because you are trying to practice proper risk management. I think that would be 1% of your account, and if it's 2%, it can never be placed beyond $100. Because you want to practice proper risk management. So take note that you need to practice proper risk management such that if the trade does not play out your way, you're able to just suffer a little loss. And if the trade plays out your way, you profit and compound bit by bit. Don't be a person who just wants to get $1 million in a day. Compound and let your account add on gradually so that you get there and you improve your trading skill. One of the things that have helped me also be profitable, that have improved my trading skill, is setting a daily loss limit. Don't go beyond a certain amount of loss. You can set your daily loss limit to $400, $500, $100, $10, $5, depending on your account size. Set a daily loss limit such that if you've suffered losses up to a certain amount, then you close your platform, go and learn, go and reset your emotions, come back another day and trade when you're emotionally stable, and also when you have maybe the setups that you used to trading, because there's nothing as bad. What makes a bad trader is a trader that keeps on losing and losing and losing and still trades after, you surpassed a certain amount of losses. You keep just wanting to trade because now you are revenge trading. That makes a bad trader. So because we want to improve our trading skills, when we've set our loss limit, when we've reached it, we close the platform, stay away, go back to the drawing board, start learning again, start refining our setups, or go and read about your setups again. Go and find content about the setups that if it's QML, go and read books on QML. If you're trading a flag pattern, go and read books about the flag pattern. If you're trading supply and demand zones, go and read books about that. If it's order blocks, go and read books about that, and go and look at other setups that people actually took that had your actual patterns, that had your actual setups, and you will realize that you'll become a more profitable trader and you'll improve your trading skill, because you need to keep learning. It's a learning process. You need to keep learning and you'll realize that you'll be a more profitable trader. So these are the things that also improved my trading journey. These are the things that I also used to improve my trading skill. These helped me compound my accounts and be a profitable trader. So you also come back to this video and also comment below one of the things that really affects your trading from the list that I've given you. What is it that gets you to be a good trader, profitable trader, or what is it that makes you a bad trader that needs to improve? Comment below and subscribe if you'd want more information on trading. I'm not gonna be giving you hype information where you just get too excited and think that you're going to be making $1 million the next day. This is a process, this is a journey. If this is you and you want to be involved in getting information about trading that will make you grow your trading skill, that will make you a profitable trader, then this is your channel right here. Subscribe and like and share to your friends and family too. Till next time, bye.